You're listening to the Learn Like a CPA podcast, where we talk about all things real estate, tax strategy, and personal finance. Whether you're a real estate investor looking to scale your portfolio, or you're an individual wanting to take your financial freedom journey to the next level, this is a podcast for you. Welcome back, everyone, to the Learn Like a CPA show. I'm your host, Ryan. Today, we're going to talk about self-directed IRAs. So I brought up self-directed IRAs a couple months ago, just brief overview, kind of explaining how they work. But today I wanted to take a deeper dive into the self-directed IRA and explain to you how you can use it to fuel your wealth building journey. So what a self-directed IRA is it's taking the money that's in your retirement accounts. So whether you have IRAs, you might have a 401k, pension, anything with your employer, it's taking that retirement account that is invested in Wall Street, stocks, bonds, mutual funds, etc., and taking that and investing in things that you know. So some of the things that you are able to invest in with could be, most commonly is real estate. So you can own small little rental properties in there. You could be an owner in a business. You could have your IRA invest in a syndication deal, which is a frequently asked question that I've been getting a lot about, hey, what can my IRA do? What can it not? And so today we're going to talk a little bit more about it into detail. So I'll first start off by saying this is going to be for your retirement account that you don't have with a current employer. Most current employers are not going to let you roll your retirement account out of their plan and into this self-directed IRA. So you're going to, and this is not an anthem for quitting your job just so you can have a self-directed IRA, but just know with your current employer, most likely you won't be able to self-direct your IRA. But what you do is, if you have a retirement account with a previous employer, you can self-direct that. So you would hire a firm that specializes in self-directing. There's IRA Club. There's tons of different firms that do this, and we'll drop some in the show notes below, some of the people that we work with. But you're able to self-direct your IRA and invest in things that you know and understand, right? Like real estate and businesses. But the first rule that I want to kind of shed some light on is the self-dealing rule. So for example, that IRA account owns the real estate. That IRA account owns the business, not you personally. And so you're not able to really take money out of that account or do things that you would normally do as a real estate investor, a business owner, etc. You're only allowed to do certain types of things. And for example, if you're a real estate investor, you have to have a property manager. You're not able to self-manage the property yourself. Another thing about self-directed IRAs is that there's a lot of rules regarding who your IRA can transact with. So your parents are not able to transact with you with your self-directed IRA. There's a bunch of people that you're not able basically to do business with. So just make sure you're aware of the rules regarding who you can and can't transact with. Another rule is what's known as UBIT tax, or unrelated debt financed income tax, which is basically if your IRA goes to take a loan out. So let's say I have $50K in my IRA and I want to take a $50K loan out to buy a rental property. Well, if I have debt in my IRA, they're going to take a tax based on the amount of debt that I have in relation to the total price. So 50% of my profits in that case would be taxable and known as UDFI. Now the thing is, with a lot of long-term rental properties, the average long-term rental is going to lose $5,000 to $8,000 on paper because of depreciation. So often in the beginning, you don't have to worry about this tax, but you might have to worry about it later on in the future. One of the things I commonly asked question is, should I be investing in the IRA? Like, when does it make sense? And so I would say that the IRA, the self-directed IRA, I would not use that to buy my first deal, just because if you don't have the experience of investing in real estate, you don't want to throw the hiccups of having to do it within a retirement account also, because there's not a lot of things that you can do with inside of the retirement account when it comes to owning real estate. I think the IRA is for people who have already done successful real estate deals and are looking for a way to expand their portfolio a little bit more. So I definitely wouldn't do it for my first deal. However, one of the things I wanted to show and kind of break down is that because your IRA is its own taxpayer, it limits the ability of what you're able to do. And so, for example, like a lot of people invest in real estate because they're able to offset their other rental properties. So I'll go to the white pad. And so if I have, let's say I have rental 1 and rental 2, and I want to buy rental 3 within my IRA. Okay. Well, rental 3 is in the IRA. However, if I have, and I might have income coming from here, so let's just say a positive and a positive, and my IRA, my self-directed IRA is going to generate a tax loss. Well, because this rental is owned in my IRA, it doesn't flow to me on my personal return. So I wouldn't be able to use my self-directed IRA to be able to offset the losses from the rentals that are in my personal name. So this could be the same thing with a syndication too. So I had somebody reach out and say, hey, I want to invest in a syndication. What is the most tax efficient way or tax beneficial way to do that? Well, it depends on what else do you have going on. Do you have other income that you're trying to offset? Do you not? Or do you not? If you have rental property income that you're trying to offset, you probably want to invest in that syndication outside of your retirement account. Whether it's cash or you maybe take a loan out for it, you're going to want to invest in that syndication outside of your retirement account so that way your losses can flow to your personal tax return. Now, if let's say you don't have rental income that you're trying to offset and you just want to be able to build your wealth without triggering a taxable event, real estate within a self-directed IRA or using self-directed IRAs is great for that, because you've already gotten your tax deduction when you put the money in, and now you're able to leverage that money and use it to go expand your business, do real estate, whatever it is that you want to do within that IRA. So I say it's for people who are more advanced in their real estate careers, people who are maybe in super high tax brackets also, being able to defer that taxable event till later on in the future. That's who I think the self-directed IRA is for. So again, definitely wouldn't do it on your first deal, but it's something that when you're looking at your portfolio, hey, what are some ways that we can defer tax as long as possible? But we also want to be cautious of those rental losses that we have, because we want those losses to flow through to us as a person, so that way they are able to offset our other rentals. That's all that I got for you today, guys. We covered self-directed IRAs, a brief overview of the ins and outs. If you liked what you saw, leave a comment, leave a review on my podcast. And if you want to ask a question, just feel free to reach out on social media, Instagram, Twitter, @LearnLikeACPA, and we'll see you in the next episode.